So the news that a lot of people are talking about today and people asking me about is, what do you think about Michael Burry shorting the market? So in the recent 13F filing that just came out a few hours ago, it was revealed that Michael Burry, he made a big short position on the market in the second quarter of this year. Basically, he bought put options on the S&P 500 ETF SPY and the NASDAQ ETF QQQ. And his notional short position is about $1.6 billion. So a lot of people, they like to follow these famous investors or traders. Michael Burry, as you guys know, he was famous for making a fortune during the financial crisis of 2008, where he shorted the market. When he predicted the subprime mortgage crash, he made like $800 million in his fund. And so since then, he's become someone that a lot of people like to listen to. So is he right this time? Is the market really going to crash? And should you copy the investments and trades of these well-known investors or traders? Is that how you can make money? So to answer the first question, is the market going to crash? The honest answer is, I don't know. And the honest thing is that no one knows. We can only guess because no one can predict for certain where the stock market will go in the short term. It could go up, it could go down, no one knows because there are too many moving parts and no one can predict the economy for certainty. That's number one. Number two, I don't bother to make predictions. I just look at the current price action. I just look at the current economic fundamentals. So right now, is the market on an uptrend or is the market on a downtrend? Or is it in a consolidation pattern? So if you look at the price action, the market is still clearly on an uptrend. The market is in a bull market, although now making a short-term dip on the bull market. But again, could the bull market morph into another bear market? Everything is possible. We can't predict the future. Now, for me as an investor, I never base my investment decisions on any kind of predictions because I know that any prediction is futile. So whether I predict the market's going to keep going up or the market's going to go down, I don't really care because I just focus on the fundamentals of the individual businesses that I'm buying. So my question is, the business I'm buying, are they going to grow their revenue, profits, and cash flow over the next 5, 10, 15 years? Is the intrinsic value of the business going to keep going up? And currently, is it undervalued? If it is, I just buy. I just keep adding shares. And that's how I keep growing my wealth over time, regardless of short-term corrections or bear markets, okay? But let's come to that next question, which is it worth following these well-known investors that when they buy a stock, we buy a stock. When they short the market, we short the market. And how accurate are their predictions? How often are they right? So I decided to do a bit of research and compile all his recent predictions and whether they came out accurate. So let's take a look at the list. Now, again, his major prediction that made him famous, that made him a lot of money, was back in actually 2005. So in 2005, he predicted that the housing market in the US would collapse. So he started shorting the subprime mortgage bond market in 2005. Now, was he right on that prediction? Well, yes, he was, but he was about 2 years early. So the housing market did collapse only in October 2007 and early 2008, where he eventually made a lot of money. But he was a bit early on that one, okay? So after he made a lot of money, which was about $800 million, and then so he went quiet. No one heard from him for quite a number of years. And then he started to tweet a lot, making predictions regularly on Twitter, right? So these were the recent predictions that came out since 2015 to where we are today. So let's take a look at it, right? So December 2015, he predicted that the stock market would crash within the next few months, okay? Now later on, we'll see what happened after the prediction, yeah? Then 2017, May, he predicted a global financial meltdown. Then in September 2019, he predicted the stock market would crash due to a bubble in index ETFs. Then on March 2020, he revealed a big, massive short bet on the market as well, like what he just showed recently, right? Then on February 2021, he predicted that the stock market would crash due to a speculative bubble. And that's when he started shorting Tesla again. Then September 2022, he predicted that the stock market, or rather he warned of more failures in the market and that the bottom was not near yet, that the market was going to go down a lot more. Then in January of this year, 2023, he predicted a recession and a new round of inflation, and he had a tweet that said, sell, okay? And then now in August 2023, it was just revealed his short positions on the SPY and QQQ in the second quarter of this year. So these are all the recent predictions. So what happened? Let's take a look, yeah? So first of all, let's look at the one where he was right and he made money. And that was, again, back during the financial crisis. So again, he started to short the market. He shorted the mortgage bonds in 2005 right there, okay? Now, the moment he shorted it, it didn't go down. In fact, it kept going up for 2 years. And he was kind of like, being squeezed by that. And if you watch the movie The Big Short, you know that it was very painful because if you short the market and it goes up, you are losing a lot of money, okay? So in fact, from here to there, 2 years it went up. His unrealized loss in his fund was $1.7 billion. Okay, so a lot of his investors freaked out. It's like, what are you doing? Are you crazy? Right? But eventually he was right. 2 years later, he was right. The market crashed and he reversed that loss into $800 million profits. Well done, my friend. Okay. But the question is, imagine if you, now at that time there was no Twitter. Okay. So he couldn't tell everyone now. But imagine if he told people that, hey, I'm shorting the market in 2005 and you followed him, would it have been a good idea? Maybe not. So even though he was right, you could still have lost everything because for the next 2 years, you would have to sustain massive losses. Now, he had the balls and he had the cash to withstand a $1.7 billion unrealized loss first before he eventually made $800 million. But for most people, if you don't have the cash or the balls to sustain those 2 years, you would have died along the way, all right? So that goes to show you that, even if a great investor or trader is right and you follow him, he makes money, you could also lose a lot of money because you don't have his firepower, you don't have his balls or his patience, if you will, right? So that's a very important thing to take note of. Now let's take a look at his recent predictions starting from 2015. So I put in all his predictions and what actually happened in the market on this chart so you can see it visually. So let's take a look. And so the first recent prediction was December 2015, right here, when he said that a crash is coming in a few months, okay? So did the market crash? Well, not really, okay? So after he said that, the market did go down, but it was not really a crash. This was just a 10% drop, okay? Not even a correction. It was in fact less than 10%, and then boom, the market went up, okay? Then in May 2017, he then said, he tweeted, right, global financial meltdown is coming, okay? So was he right? Not really, okay? So the market kept going up, drop here, and it kept going up all the way there, okay? Then in September 2019, he said there's a bubble in the index ETF market that's going to collapse the whole market. So after he made a prediction, well, market kept going up. Now you could say, hey, he was right. The market crashed here. He was right, right? Well, not really, okay? Because the market crashed here not because of the bubble in the index ETFs. The market crashed here because of COVID, something that he couldn't predict. No one could predict, all right? So it's one of those things where you say, you make a prediction and, eventually it could happen, but it's not because of what you predicted it to be. Okay, because eventually the market will go down, right? It's like, a broken clock is right twice a day. Like if I go to my friend and I say to my friend, you are gonna take a shit. Okay, now eventually he will have to take a shit, but you don't know when. Could be today, could be tomorrow. But he will eventually have to take a shit, right? So would I give this to Burry that he was right? Not really, because it went down for a totally different reason. Okay, and then it went down and then it went back up again. Okay. Now, then next one was February 2021. He said market is in a bubble. a crash is coming. So did the market eventually crash? Well, yeah, it did. So you could say he was right on this one, but it was again a bit early. He was about 6 months early on this one, right? 6 months early. So if you shorted here based on his tweet or his prediction, again, you may have lost a lot of money here, and you would have to, hold it long enough to get that payoff. So whether you could have, you don't know, right? Then the market went down, as we know, last year during the bear market when the Fed kept raising interest rates very fast. And market dropped here, and the market bottomed in October last year. And if you recall, that's when I started to buy, when I said that the bull market has started, right? Now in September, he actually said that nope, we are not near bottom. More failures are coming. This was September last year, and he tweeted this 1 month before the bottom. So this was, I would give it, he was wrong on this one, because the moment, if you followed him and shorted here, you would have missed out on this rally. Or if you shorted, you would have made massive losses, okay? Then, in January this year, 2023, this was his famous tweet this year. He said sell, okay? He said a recession is coming, sell, and this one, he was definitely wrong on that one, right? He said sell, market went up instead. In fact, he then came up with another tweet that said, I was wrong to tell you to sell, okay? And then, of course, now, in August, it's been announced that he shorted the SPY and QQQ in the second quarter of this year. So second quarter could be any time from April to June. We don't know exactly when he shorted, but somewhere between April to June, he shorted. And if he did that, he would not be right yet, right? Because the market is still up from where he shorted and has not come down yet. So for the last prediction that he's making now, we don't know how it's going to play out, right? But if you look at all the predictions since 2015, how's the track record been? Well, not that great if you look at it, right? And if you had so-called listened to all these things and be fearful of staying in the markets, or worse, you shorted the market, you wouldn't have made money. You'd have lost a lot of money, because the S&P 500 gained 156% during this entire close to 18 years. Okay? So in conclusion, let's take a look at how those predictions panned out. Okay? So again, the first prediction was in 2005, he predicted and shorted the subprime mortgage market, and he was right, but he was right 2 years later, yeah, and he had to sustain massive unrealized losses first before he could make a profit. And if you followed him, you may not have made a profit. You could have been killed before it happened, right? Then on December 2015, he predicted that the market would crash within a few months. Now again, so what I did was I say, okay, after a prediction, I look at what happened 12 months later in the market. So I give it 12 months to be fair, right? Because you could say, 1 month, I'll give it 12 months, right? So after his prediction, 12 months from the prediction, the S&P was up 11%. Okay, so if you kind of shorted the market, you may not have made money, may have lost money. If you stayed out of the market, you would have missed 11% gain. Okay, now then in 2017 May, he predicted a global financial meltdown. After that, 12 months later, the S&P was up 19%. All right. Then September 2019, he predicted that the stock market would crash due to a bubble in the index ETFs. 12 months later, S&P up 15%. And of course, in between that, there was the COVID crash that recovered very fast, right? Then March 2020, which was after the COVID crash, he revealed a massive bearish bet on the market, saying that it's going to get a lot worse, and this one, it was dead wrong, right? Because 12 months later, the S&P was up 72%. Okay, then February 2021, he predicted that the stock market would crash due to a speculative bubble. He went short on Tesla. 12 months later, S&P up 16%. Okay, September 2022, he predicted that the stock market, he warned of more failures. Bottom is not hit, we're going to go lower, but 11 months from then, S&P up 21%. Now, why 11 months? Why not 12 months? Because we have not reached the 12 months yet. Because this was September last year We are August 2023, so it's been only 11 months, but the market's up 21% since that gloom and doom prediction, right? Finally, this year, January 2023, he predicted a recession and said, you got to sell everything. And since he said that, market's up 17% year to date. And the final prediction or the final move he made was, again, in the second quarter of this year, and it was revealed that his short position on the SPY and QQQ was just revealed today. So, looking at the track record of predictions, are they 100% accurate? The answer is no. And it's not his fault. I'm not saying that he's a bad investor or bad trader. If I were to make predictions, the same thing would happen. Okay? Because no one knows where the market's going to go in the short term. It can go anywhere, right? But as you guys know, for me, I tend to be bullish majority of the time. Because if you're bullish most of the time, the odds are in your favor. Because statistically, if you look at the markets, the stock market goes up over 70% of the time. So if you're always bullish, you'll be right 70% of the time. But if you're bearish, you'll be right only 30% of the time. So since we can't predict for certain, it makes more sense to be bullish than bearish because the odds are in your favor. You follow what I'm saying? Now, I was curious and I asked Bang Pham Van, who is my options grandmaster, to help me to do some calculations to find out, since he entered the put options on the SPY and QQQ in the second quarter, how much would he have lost so far, right? So we did some calculations. Now again, this was revealed on the 13F filing. He bought put options on the SPY, on the QQQ, and the notional value of the puts is about $1.6 billion. Now, that doesn't mean that he actually came out with $1.6 billion of money to short the market. No, using options, there's a huge leverage factor. So in fact, his actual outlay, we calculate is roughly about probably $40 to $50 million bet, which means if he's wrong and the market goes up, he will lose about $50 million, okay? But if he's right and the market goes down, sure, he could make a lot of money. Now, so far, since he entered the position, in the second quarter of this year, the market has gone up so far. So far, he's sitting on a losing position. Now, we don't know whether he closed it or it's still open. That we don't know, right? And we have no idea exactly when he entered it. It could be, again, any time from April to the end of June. Okay, we don't know. Now, if he entered in April or May, then he's more fucked, right? Because the market has gone up like about 9% since April. So he'd be in a big loss. But let's assume that he only just entered it. Let's assume that he only went in June. Okay, and let's just take the 15th of June as an example, right? So what we did was we did some calculations and we assume he entered on the 15th of June. Now, doing some back calculation, we are guessing that he bought 20,000 contracts of the SPY put options at $443 per share. So that's a notional or nominal short value of $887 million, okay? Now, if we are assuming he bought the put options at the money, that means at the market price at the time, with a 3 months expiry date, okay? So that would mean his premium that he paid would be about $10 times 100 shares per contract times 20,000 contracts. So his outlay is about 20 million on the SPY puts, okay? Now, on today's value, since he entered to now, the puts that he bought are now worth $4.60 because of time decay and because the market has gone up since he entered. So right now, his puts would be worth about $9.2 million, which means that on the SPY puts, he's down about 10.8 million so far. Now, for the QQQ puts, again, he bought 20,000 contracts, we're guessing, and he entered at the money puts at a 3-month date to expiration. His premium would have been about $13. So his outlay, 26 million. And the current value of his puts today would be about $6.80 times 100 shares per contract times 20,000 contracts that's 13.6 million left, which means he's lost 12.4 million. Okay, so in other words, if you add 10.8 and 12.4, our guess is he has lost so far $23 million, which is about 50% loss on his put options. Now, this is assuming that he bought 3 months to expiration. We don't know, okay? Now, if he bought a longer time to expiration, he bought a 12 months expiry, there'll be less time value decay, which in that case, he would probably have lost less money. He would have lost roughly about $9.3 million. So we don't know, right? But the point is right now he's in a loss position, and if the market keeps going up, he could lose the entire $46 million, right? If the market indeed reverses and collapses, sure, he'll make a lot of money, you know? Personally, is this a bet that I would take right now? I wouldn't, okay? Now, it's not that I never short the market. I do short the market. I do buy put options at times when I feel that we are confirmed in a bear market and it's the early stages of a bear market. Yes, I will short the market. I've done it before, okay? But for now, the price action suggests that we are still in a bull market. And for me to predict that the bull will turn to a bear, to me, I think the odds are still not strong enough for me to do that, okay? I have to see a breakdown in the price action. I got to see the price of the market at least trading below the 50 moving average sloping down and then crossing below the 150. I have to see that kind of price action, right? But over the years, I can tell you that for me personally, I do short the market. I do get bearish, but very rarely. And the reason, again, is because, to me, shorting the market is a very difficult game to play. It's a very tough game to play because even if you're right, even if the market does go down, you have to be right on the timing. And even someone like Michael Burry, who's so smart, he can be 2 years early. And if you don't have the balls or the cash to withstand a lot of losses before finally getting paid off, it's not worth taking that kind of risk, right? In fact, research has shown that 70% of bearish trades lose money. 70%, which is not hard to understand because statistically the market goes up 70% of the time, right? Market goes up more than goes down. So it stands to reason that if you short the market, you are going to lose money 70% of the time. So you got to make sure that the 30% you are right has to make enough money to cover the 70% you are wrong, which is a very tough gig to play. And that's why for me, I very rarely short the markets unless I'm super, super convinced about the price action. I rather go long on the markets. I rather hold great quality companies that I know will always go up eventually. That on any given year, 70% of the time it will go up, 30% of the time it's going to go down. I rather the odds be forever in my favor, as Katniss says in the Hunger Games, right? And that is why if you look at funds that focus on shorting, they are what we call short focus hedge funds. And you find that the majority of them, they all go bust over time. Give you an example, right? Between 2009 to 2021, the S&P 500 quintupled, right? Means it went up by 4 times, right? 400%, okay? Whereas short buyers index funds, right? Funds that shorted the market, traders that shorted the market, bet against the market, they drop 85% in value. And eventually most short funds, they tend to close down, okay? So hope this has been a useful sharing for you guys. Now, in my next video, I thought I'll do something interesting as well. And the reason I'm doing more videos right now is because I'm pretty free right now. I'm really very bored. So it's like, you're not thinking to do all these videos, right? Another very famous investor, Monish Prabhai, known as a value investor, okay? He recently bought a stock called AMR, Alpha Metallurgical Resources. And he put in, if I'm not wrong, right? He put in like 81% of his US portfolio into one stock. And initially when I looked at the stock, it looked pretty interesting. You know why? Because this stock AMR has a PE ratio of only 3 times earnings. That at first glance looks so cheap, my God, right? And at the same time, it's got gross profit margins of 32%, net profit margins of 26%, return on equity of 63%, return on invested capital of 53%, and it's got hardly any debt. So at first glance, looks like, wow, it looks fantastic, right? It's a great company, so cheap. But sometimes when something is too good to be true, it may be too good to be true. So if you're interested, subscribe. In my next video, we'll take a look at AMR and let's see if this is really a fantastic buy. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.